Well, Urjit Patel's resignation as the governor of the Reserve Bank of India is especially surprising, as we had been given to understand that the issues between the government and the central bank had been ironed out in the November 14th board meet. That is the word coming in from former RBI chief D. Subbarao, who in a conversation with CNBC TV 18's Lata Venkatesh said that the government will have to do some serious introspection and choose a governor who will demand the credibility of the market as well as be able to restore the central bank's goodwill.
My first reaction was of some surprise and some no surprise as well, because no surprise because for over the last 2 months, the possibility of Dr. Patel resigning has been in the realm of speculation. But I was also surprised because there was an impression that after the 19th November meeting, the government and the Reserve Bank had resolved the outstanding issues. But evidently, Governor Patel seems to have been pushed beyond this level of comfort, and there comes the resignation.
Okay. We are still in the realm of speculation, but the understanding is that at the upcoming December 14th board meeting, the board was to get extraordinary powers over all actions of the Reserve Bank. Do you think this would have been beyond, as you call, the realm of comfort of any Reserve Bank governor?
Oh, absolutely. Because the board of the Reserve Bank, as currently structured, is not an appropriate forum for taking decisions on policy issues. If the policy issues have to be taken in a committee or in a board, the board has to be structured differently. It has to have people who will have no conflict of interest. And also, I think they have to be full-time directors on the board, not people who are part-time like this now.
Oh, yes. I never thought of that, sir. But now when the government looks for a new governor, if this is the service conditions that the board will closely supervise, and the board is what it is, it cannot be changed unless perhaps the law is rewritten or different conventions are set. If these are the service conditions, do you think it will deter the next candidate?
I'm sure that the government has the maturity experience. They will introspect on Governor Patel's resignation and also perhaps examine in what way they will have to push their agenda. Push is the wrong word, but in what way they'll have to pursue their agenda, to what limits they can push it, and at what point of time they have to withdraw. So the government will have to do some deliberate, serious introspection on this. So given that the government will do that, the next incumbent governor, who she or he, will of course have the task of restoring the credibility of the RBI and entering into a working arrangement with the government, which does not give the impression of being influenced beyond acceptable levels by the government.
Who do you think is the best incumbent now?
I think the government should draw up a long list, narrow down to a shorter list, and choose a candidate who will command the credibility of the market, who is known for professional competence and for maturity of handling the relationship with the government.
Well, we'll revisit our top story today, and that is the election coverage. A quick look at the leads from Madhya Pradesh, which is still, close to call. The Congress is in the lead in what is seen as a dead heat. Let me now go to Shreya Daundial in our election hub to find out why this race is still too close to call. Shreya, wafer-thin margins in many states. Many seats in Madhya Pradesh. What's the latest?
Oh, well, what I can tell you is that it's still all up in the air. There are 19 such seats in Madhya Pradesh right now where the battle is so close that the margin is anywhere between 500 to 800 votes. These are 19 seats, mind you, and what are the leads that we are seeing right now coming in? We have BJP at 104 and Congress at 115. So for the next 45 hours, till the last vote is counted, I don't think anyone will be in a position to tell you who's winning Madhya Pradesh and who's losing Madhya Pradesh. Rajesh Raina is the one who has actually conceptualized the result hub, and he's going to be telling us why we are getting the results the fastest here at the result hub, and whether these numbers that you're seeing for the for Madhya Pradesh, BJP at 104 and Congress at 115, whether we are expected to see a dramatic drop or fall in any of these numbers. First things first, the numbers that are coming in from Madhya Pradesh, it's still open.
Yes, yes. You see, as you said, 19 constituencies are there where there's a neck-to-neck fight between Congress and BJP, right? The difference between Congress and BJP is only 500 to 700 votes, right? So, game can just go towards any side.
And there are a lot of people on social media asking us, we are seeing other channels, we are tracking other channels, the sort of lead that you're showing, the sort of numbers that you're showing, it's way too much, because look at what the others are doing. Where are we getting these leads from?
You see, other channels were just inflating data since morning, right? We are watching all the channels here in the live result hub. So our strategy is entirely different. We don't depend on any agencies, right? So there are 200 counting centers, and we have 200 people physically present in the 200 counting centers. And they are updating the results in the result hub in real time. Through this you see there are 45 computers and 45 telephone lines here. So each and every person, they call this hub, and we update the result in real time, and that goes to the screen.
Which is why you have the first results, the fastest results, and the most authentic results. Now let me just quickly show you around. You see this first row? This is Mizoram. That was done and dusted almost an hour ago. So no activity here, most people have left. The next two rows are Rajasthan. Again, people are just hanging around to see which way Madhya Pradesh goes, but they know their job is done. The next two rows is where all the action still is right now. That's the Madhya Pradesh row, because we still do not know which way the elections will go. The last row is Chhattisgarh. They know which way the election has gone, so no stress and no tension there. But these two rows in the result hub, they are still active because every vote needs to be counted. This election, the Madhya Pradesh election, is too close to call. 19 seats where the difference, where the margin is anywhere between 500 to 800 seats. So this could go anywhere, absolutely anywhere.
All right, Shreya, thank you very much. Too close to call still, and I suppose you will keep busy till the end of the night, till the final results are in. Thank you very much for joining in. Now, despite disappointing state election outcomes for the BJP and RBI governor's surprise resignation, the last read saw a sharp rally after a gap-down opening to end with gains of about 0.5%. The Nifty and the Sensex opened with cuts of more than 1%, but saw a sharp recovery thereafter. The Bank Nifty fared below par and ended with a 0.25% uptick, and the mid-caps outperformed and ended the day 1.6% higher. Anuj Singhal is standing by with a detailed analysis. Anuj, two perceived tailwinds shrugged off by the traders.
Stunning recovery for the market today, and this is despite the market getting the worst possible news. Of course, it had to negotiate with the RBI governor quitting overnight, and in the state election, the market seeing reversal. But in the morning, like our base case was, short trade did not work because the market had already gone down quite a bit yesterday, and today morning from the low point there was a stunning recovery. In fact, almost 500 points, more than 500 points on the Nifty Bank, 300 points nearly on the Nifty is a kind of intraday recovery that you had. And the mid-cap index had a massive rally today, 2% up on the index and about 3:1 in terms of advanced decline. Towards the end, there was big buying in some of the big banks like Yes Bank, which was up 8%, SBI was up about 3%, Kotak Mahindra Bank was up 2.5%. Then there was buying in beaten down names like Sun Pharma, Titan had quite a bit of buying. Metal stocks also surged in trade, so they also saw some bit of buying. In the broader market also, there was quite a bit of buying in stocks like Adani Enterprises, Max Financial, DHFL. The short point is it all boils down to risk-reward. And this morning's risk-reward perhaps was in favor of going long. That's worked. Now, interesting to see whether things have bottomed out or whether the market has one more round of reversal. We'll find out, of course.
All right, Anuj, thank you very much for bringing us that update. Now from Dalal Street to the rupee market, where the Indian rupee rebounded after a sharply lower opening today. After hitting a low of 72.44 against the dollar, the currency has climbed up and is currently trading at about 71.76 mark against the dollar. Dollar selling by state-owned banks and a positive outlook on crude prices boosted the sentiment in the rupee market. In the bond markets, the benchmark 10-year bond yield has eased to 7.5 levels after surging to 7.7% at the opening of trade. Now, we have been speaking to several market experts, and so far we have received a mixed set of reactions from the Lal Street on the election results. Hear out what the market veteran Raamdeo Agrawal, Nilesh Shah, Dipen Sheth and Ajay Srivastav make sense of these state poll results.
I'm most stunned by the result of Chhattisgarh. So that's been one of the most surprising one. But if you look at other one, like what you're talking about, MP, again it looks to be surprising in favor of BJP. Even in Rajasthan, BJP has done better than what the bookies were saying. So I think all in all, it's probably market had discounted a lot more as of yesterday. And as the results are flowing in today, one, the event is behind us. Second, it is not worse than what market had discounted yesterday. I mean, if you ask me, I mean, I'm not a political commentator, but what I would say from the market point of view, that whatever market had the fear of till yesterday, that fear has now dissipated.
I think this is the time to continue hold on to your retail focused private sector banks. Plus, it's time to add corporate focused private sector banks as NPA cycle seems to coming to an end, and some of the recoveries will start getting reflected into the balance sheets. So this is the combination which will work. You want to invest with slightly defensive nature of growth, where despite political situation, growth can continue.
I don't think the 10-year future of this country is going to hinge on a couple of state election outcomes right now, or indeed even the upcoming Lok Sabha elections. I think India is never as good as it's made out to be, and it's never as disastrous as you might think it is during some of the bad times. So if you're a steady long-term investor, you really shouldn't get too rattled by these things and average your way in and out. So I don't think that's much to worry about.
The economic policy was in a pretty distressing situation. The economy was doing badly. And therefore, what happened to the mid-caps is what is happening to the ruling party in the elections. It's almost, the similar mirror being shown there, that if you have a bad economy, no other agenda can get you the votes. And I think it's a great positive for Indian democracy, because if the result was other way around, if it was other way around, it would have led some credence to the fact that economy doesn't matter, financials don't matter, all other issues, whether it's renaming, temple, etc., matters. So to me, as a market participant, I think it's a great result, because this is a result which should come when you reward or penalize for performance or poor performance. So I think it reflects the economic reality, it reflects the government challenge, it reflects truly what's happening on the ground.
All right, those are the top market voices on what they make of the election results so far. Now, Reserve Bank of India Governor Urjit Patel's resignation has left the financial markets in a pickle. This resignation comes against the backdrop of the ongoing friction between the central bank and the central government over certain contentious issues. In fact, Patel resigned citing personal reasons just 9 months ahead of his term ending in September next year, and brokerages believe that this will be sentimentally negative for the markets. Let's look at some of the reactions that have come in from global rating agencies as well. Fitch, for instance, says that this will increase monetary policy uncertainty and it bodes poorly for the macroeconomic and financial stability of India as a whole. Fitch also added that the uncertainty has already begun to take a toll, as what we saw in the rupee movement already today. It says that concerns that the resignation was a result of a growing discontent between the government and the RBI is a matter of concern, and potentially over the independence of the RBI as well. It does say that, we've seen a similar instance of Raghuram Rajan resigning under similar circumstances in 2016, and there is a fear that if a pro-government objective governor is put into place in place of Urjit Patel, it would reduce the effectiveness of the RBI to regulate and supervise. It would be negative for the financial markets, and it will slow down bank recovery if some of the measures put in place to strengthen the banking system are eased or relaxations are given, or also the increase in credit growth which the government has been pushing for is possible, could stoke inflationary pressures. Now, Moody's also reiterates some similar concerns. It says that the motivation for the resignation is unclear because Urjit Patel's statement did not really delve into the reason for his resignation other than the personal note. But Moody's does say that the independence of central banks remains very important, and it is important to assess India's institutional strength, and any attempt at all to curb RBI's autonomy would be credit negative for the India's macroeconomic picture. For now, Moody's says it assumes that RBI will continue to pursue both financial and price stability. On that note,